Welcome back to Investing Talk Podcast. Today we're looking closely at a company called Artelo Biosciences. Now, if you follow the markets, maybe you've seen their name pop up. Clinical stage biopharma. They made some serious headlines recently.
Yeah, that stock surge was pretty dramatic, wasn't it? Over 100% on some clinical news.
Exactly. But then you kind of scratch the surface and you find, well, a company with no actual product revenue right now. And they just did a reverse stock split, which often raises eyebrows.
It does. It's a fascinating situation.
So that's our mission today. Let's try and unpack this apparent paradox. How can you have such promising news alongside, well, financials that look challenging? And what does it all mean for you, our listener? Before we jump in, though, if you find these discussions valuable, please do take a second to subscribe, maybe like the video, leave a comment. And hey, if you're feeling generous, consider buying us a coffee. It really helps us keep doing this.
Okay, let's unpack this. So maybe start with the basics. Artelo Biosciences, as I said, clinical stage biopharmaceutical company. And let's be clear up front.
Yes.
Currently, no reported product revenue. Zero.
Right. And that's point number one for anyone new to biotech investing. No revenue at this stage. It's completely normal. It's expected, actually.
Okay, so not a red flag in itself.
Not at all. Their spending is all about research and development, R&D, and funding those really expensive clinical trials, not sales. Their focus is on developing their own therapeutics, targeting what they call lipid signaling pathways. That includes the endocannabinoid system.
Lipid signaling, so fat-related signals in the body. Essentially, yeah. Think of it like internal communication networks. What's fascinating here is their specialized approach. They're aiming at very specific pathways. For example, they're working on inhibiting something called FABP5, fatty acid binding protein 5.
Okay.
Blocking that could be like turning down the volume on certain signals, potentially pain signals. It could lead to first-in-class drugs. And they're targeting areas with really significant unmet needs, things like anorexia linked to cancer, cancer itself, chronic pain, neuropathy too, anxiety, even skin conditions like psoriasis. Big areas.
So if the value isn't in revenue yet, it's got to be in that pipeline, right? The drugs they're developing.
Absolutely. That's where all the potential value lies at this stage.
And the main one people are talking about is ART 26.12. That's the FABP5 inhibitor you mentioned.
That's the one. It's their first selective FABP5 inhibitor to actually get into clinical trials.
And here's where it gets really interesting, because they just finished a study on this one, right?
They did. They wrapped up the first in-human phase 1 study on June 30th, just recently, and the results were, well, highly favorable.
Favorable how? What did they find?
So they enrolled 49 healthy people. The drug showed an excellent safety profile. That's priority number 1 in phase 1. They only saw mild side effects, things that went away quickly, and importantly, no issues directly linked to the drug itself. No problems with people tolerating it.
That sounds pretty good for a first run.
It's very good. And the pharmacokinetics, how the drug moves through the body, were predictable and scaled with the dose. That's exactly what you want to see. It gives confidence for future studies. And remember, this ART 26.12 is being developed for chronic pain. Crucially, it's the first orally administered selective FABP5 inhibitor to get into human trials.
Orally administered, so a pill.
A pill, exactly, which is a huge potential advantage for chronic conditions.
Makes sense. Easier than injections.
Much easier.
Yeah.
And Artelo is planning the next step already. A multiple ascending dose study, or MAD study, is planned to start in Q4 2025. That'll test repeated doses in healthy volunteers.
Okay, so ART 26.12 is the lead. What else is in the pipeline?
Well, they also have ART 27.13. This one's a bit further along, actually, in phase 2 testing. It's targeting cancer anorexia-cachexia syndrome. That's the severe weight loss and muscle wasting you sometimes see in cancer patients.
Oh, yeah.
And they expect initial data from that phase 2 study during Q3 2025. So that's another potential big event coming up quite soon. Could be pivotal.
Any others worth noting?
There's also ART 12.11. This is a proprietary cannabidiol or CBD co-crystal tablet. The co-crystal part is basically a fancy way of saying they've engineered the CBD molecule to be potentially more stable and better absorbed by the body.
Better than existing CBD products.
Potentially, yes. They've shown in early work it might have improved pharmacokinetics compared to something like Epidiolex, which is an approved CBD drug, so potentially better effects at lower doses.
So connecting this back to the market, chronic pain, cancer symptoms, these are huge areas.
Massive. The chronic pain market alone was, what, over $97 billion globally in 2023? And it's forecast to grow to maybe over $159 billion by 2030. So there's a huge need, especially for non-opioid options.
And investors are keen on non-opioids right now.
Very keen. Given the whole opioid crisis, any company showing real progress on effective, non-addictive pain relief gets a lot of attention. And Artelo's position here is quite unique. As far as we know, there aren't other selective FABP5 inhibitors this far along in clinical trials, so potentially a first-mover advantage if it works out.
Which mover? Okay.
Plus, they're looking at dermatology, too, psoriasis specifically. That widens their scope beyond just pain and cancer stuff. It shows they're thinking broader.
Okay, that paints the picture on the science side.
Yeah.
But let's talk money.
Okay.
Because, as we said, the numbers can look, well, concerning if you're not used to biotech.
Right. Let's tackle that.
No revenue, we covered that.
Mm-hmm.
But then you see things like negative EPS, earnings per share. Q1 2025 was negative 72 cents, right? Which was actually an improvement from the year before, but still negative.
Correct. A loss of 72 cents per share in that quarter.
And things like negative free cash flow, negative return on equity.
Mm-hmm.
Basically, they're spending more than they make, and shareholder investments aren't generating profit yet.
Exactly. And that means standard metrics like the PE ratio are meaningless because, well, there are no positive earnings to compare the price to.
So what does this all mean? Are these the red flags they appear to be?
It depends on the context. For a mature tech company, yes, huge red flags. But for an early stage clinical biotech like Artelo, these metrics are actually pretty standard fare. It reflects the heavy investment phase. They have to spend heavily on R&D and trials before they ever have a chance of generating revenue.
So it's a cost of innovation in this sector.
Precisely. And their capital structure is important too. They primarily raise money through equity financing, selling shares rather than taking on debt.
Which means they keep needing to raise more money.
That's the reality. They need ongoing capital infusions to fund operations and hit those clinical milestones we talked about, like that recent private placement back in June 2025. They raised about $1.4 million then.
What was that for?
To keep the lights on and, crucially, to support the clinical programs, including getting that ART 27.13 data ready and advancing ART 27.12. Interestingly, they also mention allocating a portion of those proceeds to buy some digital currency, SOL.
SOL. It's different for a biotech.
It is a bit unusual, yeah. Maybe a diversification play or perhaps related to specific payment needs. It's not entirely clear, but it was noted.
And then there's the other big financial event in June, the reverse stock split.
Yes, the reverse split.
What's the typical reason for that? It sounds negative.
It often is perceived that way, or at least signals past struggles. Companies usually do it to boost their share price per share, often to meet Nasdaq's minimum listing requirements, like staying above $1 per share.
So this is just the price had fallen quite low.
Generally, yes. It artificially increases the price per share by reducing the total number of shares outstanding. It doesn't change the company's overall value, but it does indicate there's been downward pressure on the stock price.
This raises an important question. How do you reconcile this challenging financial picture, the need for cash, the reverse split, with the promising clinical news we just discussed?
That's the tightrope walk of biotech investing. It highlights the extreme risk-reward profile. You can have a company burning cash, needing funds, with a beaten-down stock. But simultaneously, it might possess genuinely exciting science that could lead to a massive breakthrough and huge value creation down the line. They coexist.
Okay, so that positive clinical news on ART 26.12 at the end of June,
Yeah.
How did the market react? You mentioned the surge earlier.
Oh, the reaction was immediate and strong. The stock jumped over 100%, like you said. Trading volume spiked too.
So the market loved that phase 1 data.
Absolutely. It clearly saw it as a major de-risking event for ART 26.2 and maybe for the FABP5 platform in general. It was validation.
And what about the financing news that came around the same time? Did that dampen spirits? More shares being issued?
Interestingly, no. It seemed like the market viewed it pragmatically, almost supportively. Like, okay, they got good data, now they have some cash to keep moving forward. It didn't seem to hurt the positive sentiment much.
So what's the overall feeling now? Cautiously optimistic.
I'd say that captures it well, at least among analysts who follow the company closely. Cautious, because the risks are still there, but optimistic because of the pipeline progress. Though it's worth noting, some purely algorithmic models, the quant systems, they might not flag Artelo as a top pick just yet, given the financials and recent volatility.
And what about retail investors? Buzz online.
Definitely a spike in chatter after the stock surge. You saw more discussion on platforms like X, Twitter, Reddit, those places. People get excited by triple-digit moves. Of course, with that comes, well, rumor sometimes. talk of potential partnerships or even acquisitions.
But unverified.
Completely unverified at this point. You always have to take that kind of social media buzz with a massive grain of salt until there's official word. It's just part of the landscape with these volatile stocks.
Right. So let's try and pull it all together. Balancing the scales. We've talked about the good stuff, the potential. What are the main risks investors really need to keep front of mind here?
Okay, risks. Number one is still the financial reality. No revenue, ongoing losses. That means
I need more money.
they absolutely need more money. Their survival depends on accessing capital markets, fundraising, and the biotech funding environment isn't always easy. It can be choppy.
Yeah.
So that's a constant risk.
What else?
Pipeline risk is huge. Clinical trials fail a lot. Even after positive phase 1 data like ART 26.12 just showed, if one of their main candidates hits a major setback in phase 2 or 3.
It could crater the stock, especially since they don't have dozens of candidates.
Exactly. Their valuation is heavily tied to these lead assets. Then there's the dilution risk we mentioned. Future fundraising likely means issuing more shares, and just the general volatility of small-cap biotech stocks. Plus, regulatory hurdles down the road with the FDA or other agencies. It's a long road.
Okay, those are pretty significant hurdles. Now, flip side, the opportunities. What makes taking on that risk potentially worthwhile?
Well, the biggest one is that first-in-class potential for an oral FABP5 inhibitor with RT26.12, if that pans out for chronic pain.
It could be a game changer, targeting pain differently from opioids or NSAIDs.
A potential game changer in a massive market looking for alternatives. That's the home run scenario. Then there's the expansion into multiple large markets. Pain, cancer, anorexia via ART27.13, potentially dermatology. Diversification helps.
Reduces reliance on just one thing succeeding.
Right. And you have clear near-term catalysts coming up. That RT26.112, multiple ascending dose study starting Q4 2025. And importantly, that initial phase 2 data for ART27.13 expected sometime in Q3 2025.
So news flow potential in the coming months.
Yes, specific dates to watch. Positive results from either of those could significantly boost confidence and, likely, the share price again. These are major inflection points.
Okay, so summing it all up, Artelo Biosciences, where do we stand?
Well, if we connect this to the bigger picture, you have a pre-revenue company, still losing money, yes.
Sure.
Recently did a reverse split, which reflects some past pain points. But they have an active clinical pipeline that's showing real promise, highlighted by that very positive ART 26.14 phase 1 data. So my personal take, I'd probably classify it as hold speculative.
Well, it was speculative.
Meaning there's clear upside potential if things continue to go well clinically, especially with the upcoming data reads. But the risks, financial, clinical, are still very high. It's not for the faint of heart. For you listening, it really means you need to watch those upcoming clinical milestones like a hawk. That Q3 data for ART 27.13, the start of the next ART 26.12 study, those results will be critical for reassessing the story.
It really is a fascinating balance, isn't it?
It is. Science versus financials. High risk, high potential reward.
So a final thought for everyone listening. Think about that balance you just heard. The inherent risks involved in trying to create something brand new, a breakthrough medicine, versus the huge potential rewards if a company actually delivers, like Artelo might be starting to do with ART 26.12. What does exploring this company inspire you to think about next regarding innovation and investment? Thank you for joining us for this look at Artelo Biosciences. We hope it gave you some valuable context. Keep learning, keep questioning. We look forward to exploring another topic with you next time right here on Investing Talk Podcast.